Awesome. All right, guys. So good morning, good afternoon, good evening. I've been talking here to some of my agency owners, some of my agents. We're going to get right into training. I want to train today on mortgage protection leads. Okay. I want to talk about the psychology of mortgage protection leads. I want to talk about what product they're thinking that they want to buy. And then in the same token, I want to talk about what are the upsell opportunities that you can bring to the table. Okay. Before I do that, I want you to understand this. A lead, for all intents and purposes, is nowhere ever going to be as hot as a referral. It will never be. And as exclusive as the marketing company gives this lead to you, I want you to understand something. It doesn't stop the person, the consumer, from filling out 4 or 5 different questionnaires from 4 or 5 different marketing companies. So you have to act urgently whenever you receive a lead, whether it's a final expense lead, a mortgage protection lead, or a Medicare lead, or whatever it is you're working. You got to act urgently because the marketing company that's giving you the lead is saying that it's exclusive. They typically make it exclusive for a 30-day period. After 30 days, they start selling it off like an age lead. But there's other marketing companies that the consumer, the lead, might have inquired on, and they're getting that data as well too. So it's a race. No lie, it's a solid race because there's 3 or 4 other agents, possibly from the same exact IMO or different IMO that you might represent, that is calling that person to schedule the meeting. And I'll tell you which one's going to get the sale. The one that meets the client first typically gets the sale. The one that gets a chance to go from a phone call conversation to a face-to-face or a virtual conversation is going to get the sale, because there's so much communication that happens when you finally get into face-to-face. When you're not just using your ears to listen to somebody, but you're also using your eyes, right, to see the person, to see their tonality, to see their facial expressions, to see how they're responding. That also that begins to solidify a relationship. People will make a decision of you the first 10 seconds that they visually see you. It's not 10 seconds that they hear you. It's 10 seconds that they visually see you. That doesn't say that the auditory doesn't matter. So yes, tonality matters, posture, positivity matters. I have a desk that rises. Like right now I'm standing because when I'm making phone calls or I'm doing trainings and I'm hyped up, I want to make sure that I'm up because it changes the way my tonality works. So that's very important. But your race is to get visually in front of them faster than the next person does. That's no lie. That's your race, okay? Now, when someone buys a mortgage protection lead, what is their original purpose? They just got a house, number one, okay? And they want to make sure that the mortgage itself is covered in the event that they die. Why? Because they might have purchased what's called PMI, write that down, PMI, principal mortgage insurance, from their lender. Don't let people get confused into thinking they have insurance on their mortgage. They don't have insurance on their mortgage if they have PMI. The lender has insurance on the mortgage if they have PMI. That doesn't protect them. That protects the lender. That insurance policy also decreases over time with the balance of the mortgage, yet the payment that the person is making stays the same. And that payment is typically pretty high to begin with. That payment gives them an insurance that if the person dies, the balance gets paid off of the mortgage. Is that really beneficial? I'm not going to say it's a bad thing, but here's what I am going to say. Let's say you're in a mortgage for 20 years. You've brought that balance down from $350,000 to now $100,000. Wouldn't you want to make sure if something happened to you, your family gets the original $350,000 that you've been paying for 20 years, rather than just paying off the $100,000 that's remaining on the house? I mean, yes, it's a benefit. The house is paid, but I would still much rather they get the big number, right? What if it's not a death? What if it's a disability? What if it's a living benefit claim, like a cancer, a stroke, a heart attack? What if it's something like that? I'm dealing with a client right now. She's a nurse. She's dealing with heart failure right now. We filed a claim on her NLG policy. Okay, she's dealing with heart failure right now. So she didn't pass away. She still has a mortgage. She still has the responsibility of her home, but she's able to file a claim and get a lump sum of money out to replace some of her income because she went from full-time to part-time. Right, to pay some of the medical bills because she doesn't necessarily believe in contemporary Midwestern medicine, right? So she wants to do some things that her health insurance, quite frankly, doesn't cover. Well, guess what? This lump sum of money does. That's the biggest difference between PMI and the person getting their own insurance. So when people request mortgage insurance and you get that lead, they want insurance to cover the balance of their mortgage. I got a $300,000 mortgage. I want a $300,000 insurance policy. What they're thinking about is term life. And no lie, that's your first angle. That's 100% your first angle. But You can either be a transactional seller or you can be a relationship seller. A transactional salesperson comes in, makes a sale, gets out. Doesn't really build too big of a relationship, doesn't try to cross sell, doesn't try to upsell, doesn't try to get referrals. You're in, you're out, and you're out about. I mean, literally done. That person is going to live on leads forever. I promise you that person will live on leads forever. They will never be able to experience the benefit of what it is to have what's called a BOB, a book of business. They'll never experience that. And you might say to me, well, Tony, what do you mean? How do you benefit from a book of business? I'll tell you how. If you build a relationship with your clientele will follow you anywhere. They will transact with you 4 to 7 times statistically in their lifetime. And their first sale will never be the biggest sale if you build a relationship with them. Okay, I just got a phone call a couple weeks ago. Client of mine, he's been a client of mine now for 3 years. He says to me, he says, listen, man, I just got a house. And I was at State Farm. I was getting some rent, homeowners insurance. And they sent me these quotes on these kid policies that I want you to take a look at. He says, let me text them to you. Boom, he sends them over to me. $200 a month whole life policies for kids. $200 a month whole life policies for kids. He says, what do you think about it? I respond back. I go, honestly? He says, yeah, give me your honest opinion. I said, I think it's garbage. I said, there's a lot better solutions for kids than that. He says, okay. He says, my budget's $200 per kids. Go ahead and apply. Let me repeat. Go ahead and apply. He didn't say, send me the numbers. He said, go ahead and apply. You know why? Because I've already built a relationship with the guy. I've already sold him the top 3 things that I needed to sell in the first meeting. Myself, the company, and the concept. He trusts me. That relationship's already there. The relationship is what retains the person there. You know what that means? That means another Joe Schmo agent can contact that agent, that client next week. And it doesn't matter if they're saying they could do 10 times better in the policies. The relationship is what solidifies. I am wifey material of an agent. I am not side chick agent. If you want to be transactional, you'll be side chick agent. You'll be replaced left and right. You won't have a strong attrition. You'll put business in and you'll lose business just because another agent comes by and offers $5 cheaper. Not necessarily meaning that the secondary agent is bringing a better policy, but just because it's $5 cheaper, that's what they hone in on. Relationship is what causes you to create what's called a sticky situation with your agent, with your clients. Sticky means retention. They don't want to lose you. They don't want, and they'll cross sell. They'll buy left and right. And you can begin also what's called nesting. Nesting means when you put a nest in the family tree and you start making everybody in that family clientele. Everybody in that family clientele. So when you're working leads, I need you to understand something. The objective is to get into their markets. Let them give you warm leads, their referrals. You know what's so amazing about a warm referral? They didn't fill out a questionnaire online, which means you're the only person that has their number. There's not another stream of agents calling them, trying to sell them. You're the one that's trying. You're the one that's calling them. Sometimes they get aggravated with you because they're like, bro, how come it took you so long to call me? I just met up with my cousin last week and they were talking about you. And then I found out my aunt was also meeting with you. And then I found out that my dad's already met with you. How come you've met with all these people already, but you ain't met with me yet? Like, they get bothered. You can't do that if you don't build a relationship with your clientele first. So when you get that mortgage protection lead, make sure you make a decision to say, I'm gonna block off an hour's worth of time and I'm gonna build a relationship with them. You know how you build a relationship with them? I'll tell you, a dime analysis. Don't just try to shoot a flat number to them. Oh, how much is your mortgage? 300,000. Okay, let me run some quotes for 300,000. No. Listen, let's have a conversation. If something happened to you and you passed away today, and I'm the last person that you talk to, and I'm the guy that's got to knock on your family's door this afternoon and tell them what you wanted to make sure you left behind, what the hell does that story sound like? Because I have a feeling it's more than the mortgage. I have a feeling you probably want to pay off all your other debts as well. I have a feeling you probably want to replace your income because your paycheck probably is your biggest asset right now to your family. So you might want to replace 5 to 10 years worth of your income. You've got some young kids, I'm assuming. You probably want to pay off, their education. So do me a favor for 1 minute. For 1 minute, tell me what's in your heart. Tell me if something happened to you this afternoon, literally this afternoon. And I do this every time. I look at my phone, I look at my watch, I go, this afternoon, the 15th of May at 2 p.m., you're no longer here. You don't see 201. You're no longer here. And you happen to have left a conversation in me. We had a conversation, you left it in my mind. And that conversation was a message that you wanted me to deliver to your family. Now I got to get in my car. I got to drive to your family's house. I got to knock on their door and tell them, Mrs. Jones, Mr. Jones didn't make it home. He passed away. But I want you to know that Although I know you're hurting emotionally, financially, you want to make sure you're protected. And these are the things that he made sure he left behind for you in the event of. He told me he wanted you to be debt free. He told me he wanted to replace your income for X amount of period. He told me he wanted little Billy and little Joanne to go to college. He told me all of this stuff. So tell me, what would you want me to tell your family? Or do you want me to just tell them that the mortgage is paid? Right? Now, when I have this conversation, guys, I have it with confidence. Some people ask me, Tony, how long did it take for you to become confident? Let me tell you something. I get a little nervous every single time I go to a meeting. Even to this day, 15 years into the business, thousands of clients, I still get a little bit nervous every time I come into a meeting because I don't know what they know. If you go in assuming they don't know nothing, you're dead in the water. Sometimes people know some stuff. I get a little nervous every single time. So rephrase the question. Hey, Tony, how long did it take for you to come into a meeting with confidence in your presentation? I was doing that from day one. Do you know why? Because I realized that I'm dealing with people's money. If you sound scatterbrained when you're dealing with people's money, you think they want to give you their money? Heck no. So I say this to you guys. The definition of a sale is a transference of emotion. You got to transfer your emotional feeling about something towards them. It's okay to get emotional. If you guys remember Closers College, when we did it locally here in Fort Myers and Michael D'Amico participated, did you not notice every single time Mike got up and he talked about insurance, there was always that moment of like intense emotional conversation? You know why? That's 50 years of running in this industry. He doesn't know how to turn that off. He doesn't know how to not be emotional. He can't be analytical and just be like, well, yeah, I sell life insurance and, premium payments and, lapses and free look period. He can't. He'll get emotion into it because the definition of a sale is a transference of emotion. So start believing what you do, because what you do, it matters. It matters greatly, guys. I've delivered some death certificates, some death checks that, you can see it in their family's face where they're like, look, we're still grieving. We're still hurting. But my goodness, man, I'm so glad that they had that conversation with you. I'm so glad that they had that conversation with you. You've got to get like that. You got to find a way to get like that. If you're the person that runs from fear, then do me a favor. When you go into the meeting, I want you to envision your family living under a bridge because you can't financially support them. And see if you don't get emotional a little bit in that meeting. If you're the person that doesn't run from fear, but you chase the carry, you're the guy that likes the reward, I want you to envision what it would look like to take your family on this amazing, elaborate vacation, and a vacation that costs 10 grand to do that you got to financially do. Do whatever you need to do, but get emotional in that meeting. Nothing wrong with that piece. Nothing at all wrong with that piece. You know what I've learned? I'm that person. I'm an R. I'm a relationship guy, so I know how to get emotional. I've also learned which clientele I do well with and which ones I don't do well with. I do very good with business owners, lawyers, A-type personalities. You know what I don't do very well with? I don't do very well with technical people because they're much more analytical. They're much more just kind of black and white. I don't do well in that because I get emotion in and they don't respond to emotion. You know what that means? I don't do good with accountants. I don't do good with engineers. Oh my God, engineers. My God, you come across an engineer around me, I'm telling you, I'm going to match it up. One of y'all is going to sell it because I can't do that personality. It's not in me. They're very like, to them, it's like zeros and ones. That's how they view life. I see life in color. They see life as zeros and ones. Everything's a formula, right? And don't get me wrong, math is good. Everything is, to me, I look at things as well too in that way. But when it comes to selling 100% is emotion. If you want to sharpen your knife in that, I encourage you to read a book called The Little Red Book of Sales. Great book. Do I have it here? I do. Look at that. This one right here. Quick read. Right here. Perfect read I recommend you guys do. Little Red Book of Selling. Right? And if you want, you can, what I even encourage you to do, along with buying the book, I encourage you to download the audio book of it. Download, go to Audible and, I think it's $10 a month. Get the book and listen to the writer, how he emotionally sells you this. He does. Definition of a sale is a transference of emotion. So when you go to a mortgage protection, they want term insurance and they're thinking enough for the face value. Your job is to go in and open up a real insurance case and make them realize that they might need more than just that. So when I go in, a couple things I always do. Number one, I knock on their door. If it's a face-to-face meeting, and I'll explain how I do a virtual meeting as well. When I knock on their door, I wipe my feet on the rug. I want to make sure that they visually see me wiping my feet so that they see this as a sign of respect that I'm giving their house. Number one. Number two, I request to go to the kitchen table. I'm not trying to go into the living room. I'm not trying to go to a counter. I'm trying to go to a table where we can sit down and transact business. Number two. Number three, I want to make sure that it's not a one-legged appointment, meaning I want husband and wife together. If you guys notice, anytime I've done internal consumption meetings with you guys, when I do your own personal analysis, I will reschedule you if your spouse isn't there. I'm not trying to play telephone in sales. You know what telephone means? I talk to you and I present, and then you got to go talk to that person and present, and you got to talk to that person. And what happens is, as you communicate that information down, by the time it gets to them, it's watered down from what it was if it came directly from me. So I want both decision makers there because I have to see. You can see the psychology of who's the decision maker based on how they treat each other. You can see that. You can see that when it comes time to make the sale, one person's going to look at the other person. Whoever the person that does this, that's not the decision maker. Because the one that's the decision maker is the one that's looking dead at you. The other person looks at them like, hey, what do you want to do? You got to see that. You got to see that. You need both of them there. They're going to always offer you a drink. You're going to accept the drink. Accept it. I don't care. I don't know, but I can't be. Listen, get water. Get a glass of water, please. Get a glass of water. Accept a glass of water. You know why? Psychologically, they're trying to see if you're comfortable in their home. They're uncomfortable that you're in their home. So when you show them that you're comfortable in their home, they start to kind of drop their anxieties down. Oh, this guy's comfortable in my home. Thank God he's receiving what I'm offering him. You say no, I promise you they're going to tighten up. Say yes, get a cup of water. If you're brave enough, get some coffee, get some coffee. If you go to a Latin house, they're going to offer you food. Trust me, I've eaten many a plates and then gone home and eaten dinner. And I can't tell my girl that I ate dinner before I came home because she spent time cooking the food, and it's a disrespect to her too. So it's like, it's what happens. But that's what you're doing. That's what you're doing. When you get to the meeting, you want to request how much time you have left. I asked them, I say, listen, I've got us down for 45 minutes to an hour. Is that okay with you, or do we need to have a hard stop sooner than that? If they only give you 15, 20 minutes, guys, you're not trying to open up the case and close the case in 15, 20. You're trying to open up the case, create curiosity, and reschedule another meeting. But don't try to compress everything in 15 minutes. You're not going to make the sale. It'll take you 15 minutes just to take the application, I promise. So that's why you ask them the time. If they give you the time, respect the time. I got another meeting at ... time. Perfect, no problem. Respect the time. Fill it in there. Now, the first thing that I do when I get into my meetings, I want to give them an explanation of what I do. This is called approach language. Some people know it as an elevator pitch. Like, what's your pitch? What do you do? What's your 30-second commercial? I call it my approach language. I tell them, here's my approach. And you're free to copy it. You're free to, adjust it, edit it, do whatever you want, but have an approach and role play it. Boom, 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 boom. You have no idea where people are going to ask, what do you do for a living? Get into it. If you stumble, I know you ain't practicing it. What's your approach? I specialize in 2 areas: protecting people's biggest assets, which is their income. In that regard, I talk insurance. Life insurance if you're not here, disability insurance if you can't work, long-term care if you need a nurse to take care of you. I also specialize in the second area, which is retirement planning, specifically making sure you don't outlive your money and have to go back to work, and making sure Uncle Sam doesn't dip into the cookie jar and tax you. I want you to not pay taxes. Mr. Client, which of these 2 conversations do you want to have with me today? And I let them lead the way. You know what they're going to typically say? Well, I'm looking for insurance for my mortgage. Boom, going into asset conversations. Okay, perfect. Do you mind if I ask you a couple questions? If they ask you why do you want to ask the questions? You tell them, listen, I'm a fiduciary underwriter, which means it's my job to recommend something to you that makes suitable sense. I can't make a suitable recommendation if I don't know your current financial position. Unfortunately, the law and my licenses do not permit me to. Because you're going to get some people that are a little bit vague, a little bit like, no, I just looked for this, run me a quote. Give them that objection. See what they say. And then get into it. Okay, so Mr. Khan, you're looking for a mortgage. I got you. How much is this house? It's $300,000. Okay. Beautiful house, by the way. Guys, I don't care if it's an ugly house. You tell them it's a beautiful house. Okay? I don't care if it's an ugly house. You tell them it's a beautiful house. Okay? Beautiful home, by the way. Trust me, they fought hard to get that house. They fought hard to get that mortgage. You're not dealing with the wealth of America when it comes to when it comes to leads. Leads is 100% middle America. 100% middle America or limited income America. I don't want to call it poverty America because that's not true. Right? That's a mindset. It's either middle America or limited income America. It's true. Wealth of America doesn't do leads. Wealth of America works off of referrals. This is why I got so good at referrals, because I worked Wealth of America for 5 years. I understand that psychology. They want to know what their neighbor that they golf with is, who they're using for financial advisor. They will never be the lead gen people. 100%. Middle America, limited income America. Be respectful. Then once you figure out the mortgage, you then go, listen, let me ask you this other question. Do you have any other insurances? Next question I ask, do you have any other insurances? Well, I have this. You know what they might tell you? I have insurance with my employer. Okay. Do you know if that insurance is transferable? That's the question you want to ask if they say I have an employer insurance. Do you know if that insurance is transferable? They're going to go, what is that? Transferable means when you quit this job, when you retire from this job, or when this job lets you go, one of the three is going to happen. When that happens, does the insurance go with you? Because 99% of employer plans do not go with you. They're an employee benefit, which means you got to be an employee, not employed. Past tense. They're going to go, I don't know. Okay. I probably wouldn't count that towards your insurance analysis unless you're planning to die on the clock. And I say it just like that. Unless you're planning to die on the clock. And they'll kind of chuckle. Because let's be real. One of three things will happen between your relationship with your employer. You'll quit, they'll let you go, or you'll retire. When that happens, you lose everything you had with them. If they tell you they have insurance, great, talk to me about it. Tell me, what company is it with? How much is it? How much is it for? How much are you paying? Do you know what type? Do you have it with you? Great, let's talk. Let's see it. Let's see it. Let's see it. Deep down, I'm a little kid inside when they tell me they have State Farm, Allstate, Primerica, Northwestern. I mean, I'm like jumping for joy because I know we got a replacement there. Automatically, I know. They're overpriced, don't have any of the benefits that we have to offer. I just know it. I don't show that to them. Let me take a look at it. Let's compare it. Let's do a competitive analysis. Right? But then I ask them this question. So, Mr. Client, let's be honest for a moment, if you don't mind. And I'll respect whatever your answer is. Notice how I prep it. Let's be honest for a moment, if you don't mind, but I'm going to respect whatever your answer is. Okay? If something should happen to you today, May 15th, at 2 p.m, and you don't make it home, and I'm the last person that you spoke to in reference to what you want to make sure you leave behind for your family. I mean, I got to be the guy that knocks on your family's door. I got to knock on that door, talk to your wife, and tell her that you're no longer here. What are the things that you want to make sure I can tell her you left behind? Because I have a feeling it's going to be more than the mortgage. I have a feeling you probably want to pay off the rest of the debts. I have a feeling you probably want to replace your income because you're a breadwinner in the household. You probably want to replace your income for a time period. I have a feeling that if you have children, Mr. Client, you probably want to, cover their education. I mean, so just you and I right now, we're talking. Don't worry about the numbers. You'd be amazed how cost effective these solutions are. You see what you just said? Not how cheap. You'd be amazed how cost effective these solutions are. Tell me, what is the story that you want to make sure happens? If you pass away at 12 o'clock, you want to be able to know at 12:01 that this is going to be the life your family is left with because of you. What is that? And then shut up and let them tell you the story. Let them tell you, oh, I want to do this, oh, I want to do that, oh, I want to do this, oh, I want to do that, oh, I want to do this. I just did a video a couple weeks ago on a dime analysis, and it's on the YouTube channel. I open up a fact finder in the dime analysis. When I talk about their debts, I want to know all their debts. I want to see if there's a credit repair opportunity there because I'm going to ask them collections questions as well. When I talk about their income, I'm going to get their employer, how long they live there, what other side jobs they get, how much do they make. I'm going to ask them that stuff. When they talk about the mortgage, I want to know other assets. Do you have IRAs, 401ks? Do you have this? Do you have that? Do you have other investment properties? When they talk about education, I want to know about their kids. How old are they? Do they want to have more kids in the future? Are there children that don't belong to them that they care about equally, like a niece or a nephew? I want to know that. I want to know that stuff. I build my fact finder in the dime analysis. My dime analysis takes 20 minutes to do by itself just because I'm building the case up. That's all I'm doing. Once I've built it and I do the numbers, I go, Mr. Client, you need about $750,000. You know what's my first question I ask when I do that number? How does that number make you feel? Definition of a sale is an emotion. Emotional transference. I need to know how emotionally they feel about that. Because some people won't tell you anything. They might, unless you ask them. Then you ask them, and they're like, well, that doesn't scare me. Okay, good. Let's keep going. If they say, no, that scares the hell out of me, you've got to overcome that fear before you make the sale. That's why I ask them, Mr. Client, you need $750,000 of coverage here. How does that make you feel? How does that number make you feel? If they're nervous, you know what they want? They just want relief. They want to know they're not alone. You know what my language with them is? You're completely fine. Most people in Middle America need anywhere from $500,000 to 1.1 million. You're right there in the middle. So trust me, you're completely fine. Now let me ask you another question. How much do you think that costs? You know what most people tell you? Woof, it's a lot of money. You know what I'm doing is I'm prepping them for what I'm about to hit them with. I'm prepping them. That's a lot of money. And I say to them, you'd be amazed how cost effective it actually is. Let me explain to you how insurance works for a moment. There, boom. You know what I do then? Take out my yellow legal pad, take out my black Sharpie. Again, why yellow versus why a yellow legal pad versus a white pad? Anybody? If you've sat in on my trainings, why yellow versus white?
The contrast.
People who are visually impaired struggle when it's a white page, but when it's a yellow page, they can see it better. They can see it a whole lot better. Why I use a Sharpie versus a pen is because it's thicker lines. And I begin to do my presentation. When it comes to mortgage protection, I'm going to do all three of them. Term, GUL, and IUL. Term, GUL, IUL. Why? Because they're young enough, they're in that bracket where an IUL makes sense. Guys, I'm going to tell you right now. And I can validate it in a one-on-one meeting with every single one of you if need be. If you're in your 20s, especially, if you're in your 30s, even more importantly, you need an IUL in your portfolio. You absolutely, utterly, without a doubt, need an IUL in your portfolio. Even if you're like, well, I'm not married, I don't have kids, what do I need it for? Listen, you want to retire at some point in your life, not a single person on the planet tells me no. And the person that's young, that's not married, that doesn't have kids, that questions whether or not they need life insurance, my question to them is this. If you woke up in the hospital bed tomorrow and you opened up your eyes and you realize that there's a hose down your throat and you look to the right and you realize you're in a hospital bed, who's the person that's sitting next to you? Who's the person that's holding your hand while you were unconscious? You know what most people tell you? What would you think? Answer that question yourself. If you're right, mom. Mom is standing next to you. So now let me ask you a question, Mr. Young Buck. Does mom have the finances to take off of work? Because you know she's not going to go back to work. She's there in the hospital bed, making sure baby boy is okay. So when she's standing there, does she have the finances to support the bills of her house? Does she have the finances to replace her income for the time period? No, that's why you need living benefits. It's not about protecting you, it's protecting your loved ones. Because they're going to need it. You're going to need it too because you're not working. Right? That's the conversation I have with them. And that's a bit of a sidebar because, again, they inquired about insurance, so they have a mortgage they need to replace. I get that. No problem. But at that point in time is when I go into the presentation. And that's when I explain term insurance. That's when I explain a GUL. That's when I explain an IUL. And I'm not the person, I'm going to tell you this right now. I'm not the person that's going to be pushing for a simplified issue just because I want to be a transactional seller, get something approved quickly and go. Yes, simplified issue companies approve in 5 minutes. Yes, there's less work to do. Yes, the compensation on that is higher. Yes. But let's be real. Are you doing the right thing for the client? And you know what you're doing? You're shooting yourself in the foot for the second, third, fourth, and fifth sale. They won't trust you. And I promise you that business will be replaced. Somebody else is going to come along and offer them something that takes a little bit longer to approve, but gives them a hell of a lot more coverage. I just did it. I literally just did it. Social media prospect, California. You know what he bought? He did $500,000 worth of term life insurance with John Hancock that had a 75% return of premium. You know how much he was paying? He's 33 years old, super healthy, goes to the gym, non-tobacco user. I mean, premier type guy. You know how much he was paying? $270 a month for $500,000 of insurance and he's 30. It's a term policy with 75% ROP. I said, wait, what? I said, let's do an analysis. He has 2 kids, a wife. He makes $250,000 of income, by the way. You know what he needs? He needs $1.5 million of insurance. He's only got a third of that. So I say to him, I go, listen, this is your picture. This is how much you need, but you only got $500,000. So if I got to talk to your wife and tell him this story, what 2/3 of this story am I removing? It's like a gut check. Oh, snap. Wait, are we not putting the kids through college? Are we not paying off this? Are we not replacing your income? Does your wife got to go back to work and be a single mother with 2 kids? Like, what are we removing? You know what his answer is? I don't want to remove any of it. I want all of it. Okay, well, Mr. Client, 1 + 1 is 2 and you don't have enough coverage. I said, so what if I could get you that $1.5 million that you need and keep you at roughly close to the same budget of what you're paying already? You can do that? Yes, I can. You know what I sold him? $500,000 of term insurance with American National, $500,000 of GUL with American National, and I just closed on another $500,000 of North American term insurance. All 3 of them have living benefits. The GUL will last until 100 years of age, not 30. The GUL has a 100% return of premium rider versus a 75% premium rider. All 3 of them cost him a combined $320 a month. He was spending $250 for $500,000. I just got a $1.5 million with a better plan for $320. And you know what I took the time to do? I took the time to present to him how an IUL works. You know what he wants to do next year? He wants to convert his term insurance into an IUL. Did I approve him in 5 minutes? No. And I let him know. I go, listen, this is not going to approve in 5 minutes. It's not. This is going to take me 3-4 weeks. It's probably going to require a medical to do. Okay. But that agent that sold you that policy, he was a side chick. He was in and out. I'm wifey. I'm going to be around for a little bit longer. We're going to sit down on an annual basis. You okay with that? Yes, I am. Let's do it. He did it. 320. You know what that is? That's $4,000 in annual premium. So do $4,000 in annual premium. If you're a VP and you wrote that business, you're at a 95% comp on average. That's $4,000 in commission to one client. A client that'll do more business with you, because you know what else he's talking to me about right now since I embedded the bug about the IUL? He's got 2 young kids. He says, hey, can I start these savings accounts for my kids? Oh, absolutely. Of course you can. Now, in this training, if you notice, I spent so much time talking to you about the relationship side, the dime analysis side, than I did the actual presentation. I need you to understand something. The presentation is not what sells. You got to do so much to get to the stage where you're doing the presentation. The presentation excites us. Illustrations excite us. We're the crazy insurance agents that get excited about looking at a page full of grids and numbers. It doesn't excite them. What's exciting to them is peace of mind, protection for their family, knowing that they're in the right place and knowing that they're working with an agent that knows his crap. Not someone who's just transactionally trying to come in and come out. If there's one mission that I have is to reinvent what it is to be an insurance agent, because people are taking it like too much of a joke nowadays. Now it's just, oh, I'm going to make a quick buck on 120 comp on a product that only took me 5 minutes to do. No. How about I gained a client that's going to do business with me for the next 7 to 10 years because of the relationship that I built with them? It might have taken me a little bit in the beginning, but guys, the reason why Michael D'Amico, who doesn't have an agency, doesn't have an override, he gave all that up already, guys. He used to have one. He used to have a big one. He got rid of it completely. The reason why he lives so comfortably, do you know why it is? Is because of his renewals from his clientele and the fact that every single month, at least 4 to 5 clients are calling him asking for more business or referring him to the new grandson or the new granddaughter or the new son who just got married who also needs to get things in place. They're calling him. Why? Because of the relationships he built. Statistically, guys, you will sell your clients 4 to 7 times in their lifetime simply because you did right by them the first time. We're fiduciary field underwriters. Why in the hell am I going to bring a $500,000 simplified issued policy to a guy that I know can qualify for full underwriting and get 20 times better coverage? All because I want to get paid faster? Nah, let's do the right thing. People that buy mortgage insurance are young enough that they deserve to get the entire presentation of term, GUL, and IUL. And although I'm not going to actually do that presentation today, go into the YouTube channel. That video is already there. That video is already there. That video is already there. But just realize you can master that presentation. If you come into a meeting, well, let me get to the kitchen table. Let me talk to you about insurance. Boom, and you do that, you're not going to sell. They're not emotionally. You haven't created the emotional connection yet. You haven't yet. This business is like dating. Get to know them, get to feel them out, get a couple laughs out of that person, understand what they like, what they dislike, get emotional. Then when you get emotional and they're like, oh my God, this could happen, this is what I want to do, you got to put yourself as the solution. I could fix all of this for you. You can? That's all you're looking for. That you're looking for that face that you haven't. Yeah, I'd love to fix this. Because you know what's one of the other questions that I ask after I do a dime analysis? Aside from how does that number sound, you know what I ask them? How important is it to you to make sure, on a scale of 1 to 10, right, level of interest, how important is it to you that you get this type of coverage in place? Because if it's not that important to you, listen, I respect it. I'm not here to judge you. I just need to know what your level of urgency is, what your level of interest. Scale of 1, Tony, doesn't interest me. I just want the mortgage covered. 10, I wasn't aware of how much I matter to my family, and I really need to get all of this coverage in place. Where are you? 1 to 10. That gauges me. If they tell me I'm a 10, emotionally they're connected. I've already created that connection. I've already created the connection. Okay? And I'm going to tell you this as well too, to the trainees and trainer relationships for joint work. If you're a trainee and you're in that meeting and you see your trainer doing what I'm doing and getting engaged, you need to do this. Zip it, take notes. There's a connection. There's an emotional connection that the trainer just created with your prospect. You break that connection each time you interject yourself and interrupt. You break the connection. Literally, imagine like an invisible electrical connection that was just created. And then you come in and you interject. Done. Now that person, that trainer, has to rebuild the emotion again. Your job, keep quiet, take as many notes as you can. And if there's distractions in the household, listen, play defense. The kids are in the way, go play with the kids. The dog's in the way, go play with the dog. I'm allergic to dogs. I don't care. Go play with the dog. Hold your breath. I'm just playing. Don't put your life at stake. But you get what I'm getting? You understand what I'm trying to get at? Now, the other thing you have to do, as I finish off here, after that meeting is done, don't think that your job, Mr. Trainer, is over. Your job's not done. You got to debrief with the trainee. You got to make sure that whatever questions they have, you answer it. You got to schedule a meeting with that trainee and show them how to submit the applications that you just took. Or if you open up an IUL case and there's a secondary meeting scheduled, you got to schedule a case designing meeting with your trainee and show them how to run illustrations. Why you selected this company over the other. Why you came up with this solution. Don't hold that information back from them because you're handicapping your trainee, because now they always need you for meetings. And the idea behind training is so that after 3, 4, 5, 6 meetings, they don't need you anymore and they can do this on their own. They don't have to split commissions with you. Yes, it's a beneficial thing to be a trainer. I get it. You split commissions, but it's much more beneficial to receive an override because they're doing business on their own. So that responsibility is still there. And trainee, don't think that the trainer is going to chase you down. It's not their job to chase you down. It's your job to be, okay, when are we sitting down for case designing? Okay, I have a stream of questions. When can I take 30 minutes of your time and block it off so I can get these questions answered that I have, in reference to the meeting because I still didn't understand this, that, or the other. It's your job because it's your business. When I had an opportunity to build an FMO, it wasn't the IMO's responsibility for me to do my research. I had to do the research. It was my business. I had to create the relationships with the carriers. I had to come up with, the comp plan. I had to research the competitors and see what they were doing and what they weren't doing. The IMO wasn't going to do that. They offered me an opportunity to build a massive FMO, but they required me to take steps forward to build that FMO. That's why I got a lot of respect for Puebly right now. Guys, Puebly turned in 6,600 of annual personal business, AP, this week. That's respect. Well, wait, no, I'm sorry, not the week, this month so far, right? Puebly this month, right? You know why I have so much respect? Because 3 months ago, she wouldn't take a step forward without me being there to make sure she was taking the right step. right? But she was doing exactly what she needed to do. Tony, I need you to send this meeting. And she was taking notes and taking notes and taking notes and taking notes. And, oh, how do you do it this way? Oh, how do you do it that way? I would ask her, hey, can you submit the business? Or do you need me to help you do it? No, I think I can do it. But if I have questions, I'll ask. I mean, she was there. Boom, 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 boom. She was there so much that now she has the right not to be there at all. Now she got onto a plane, flew out to Illinois. She's out there writing business completely on her own, 100% without any kind of splits. Now she's splitting business with her downlines because her downlines now need her. That is respect. That's what I want everybody here to be able to do. That's what I want everybody here to be able to do. So as I close off, I want you to understand something. Emotional sales is much better than transactional sales. Emotional sales will take you from a lead to a referral to nesting inside of that family. When you take that application, make certain you get 2 beneficiaries and 3 contingents. That's 5 meetings. That's 5 meetings, especially if one of those beneficiaries isn't even the spouse. Those are 5 meetings. You can call them up and say, hey, listen, my name is Tony Martinez. You have a relative by the name of John such and such, and you're the beneficiary on a policy that he purchased. It's my fiduciary responsibility to set up a 20-minute call with you and explain to you what that policy does and doesn't do, what the 800 numbers are, and what my contact number is in the event that something happens. Because if something happens to him, you need to know what this policy does. When can we sit down? And it gives you another meeting to present. Because now you can present what he has. You can also present what he doesn't have. You know what it does? It gives them the ability to go, oh, wait, I don't have any of this. I need this myself. Boom, another sale. You do 5, statistically, every 5 fiduciary meetings that I host, 2 of them will do business with me. 2 of them from 1 lead. And I keep going into that family tree and doing it over and over and over and over again. Before you know it, everybody's a client. And don't shortcut one person and give another person better benefit because they talk. Families talk. Do the same thing. Treat them all with respect. Treat them all like they're your ace in the hole. I'm going to let you guys get going. Hopefully this was beneficial. Hopefully this was valuable to you. But here's the other thing I want. If you're watching the video, shoot me a comment. If you want to reach out to me directly, call me 239-784-1118. 239-784-1118. If you work in the insurance industry and you want to get that type of training and development, hit me up. TKO Financial Network would love an opportunity to chat with you. But if you're on this training right now, all I want is your 2 biggest takeaways on the group chat. I want your 2 biggest takeaways on the group chat. And if you have a question, like Tanisha is really good about this. She takes my advice. She gives me her 2 takeaways, and then she asks, if she has a question, she tags me on the question and then asks the question. I might not get back to her at that very moment, but I always get back to her with an answer. I think yesterday it was so amazing to me. She asked a question, and I believe it was Carlos Colon who just came on board who gave her a very solid answer. That's what the group chat is for us to collaborate together, to be able to learn off of each other's knowledge. Anyways, I can keep going, but I'm going to take my kid and enjoy the benefits of what it is to be an entrepreneur. I'm coaching my little boy's basketball team, so I'm going to go take him out and go play that game. So wish him some luck because he's in the starting 5. He's my little champion. And I hope you guys take this information and implement it, apply it on the field, and you all write up a crap ton of business and support your families and help a lot of families along the way. Have a good one. Be blessed, and bye-bye. Bye-bye.